Pluscios is a boutique investment advisory firm. My partner, Kelly Chesney, and I have been investing since the mid-90s, primarily focused on alternative investments. We lifted ourselves out of JP Morgan at the time in 2006 to co-found Pluscios. And what we do is we use our extensive experience to help clients invest in complex assets, to build resilient portfolios, and to create risk mitigating strategies. It's a focus because diverse managers add value to portfolios because of all of the things you mentioned above. But also when it comes to alternative investing, it doesn't pay to just invest in the biggest firms. Those firms are limited to the pool of the biggest investment opportunities. And you can ultimately end up getting essentially what is a benchmark. We look for managers that, if you will, swim in different ponds, smaller ponds, that look for more idiosyncratic opportunities. And so that's really one of the values and the benefits, in addition to taking risks differently and looking at things differently. In terms of manager selection, we include diverse managers in every search. At first, databases didn't even tell you, they couldn't even tell you if it was a woman or a minority or anything. And now today we've gone to the opposite end where they keep track of those things, but there are so many different databases. It's really hard to know. I'm not sure I could look through them all if I was looking through, for a particular manager. When we came out as Pluscios, we heard, and we still hear, I can't find a diverse manager that can do that. I can't find, and it can even get so specific. I can't find a Latino manager that can do that. I can find, a woman manager that can't do that. And I think that the issue is you actually have to look for them, right? You have to make that a priority for them. You have to look for them. You have to let them know you're looking for them, and you have to keep track of and perhaps even mentor them along the way. And I can assure you, whatever your requirements, we can find a diverse manager that fits the bill. It will be more difficult than you think, will take multiple times longer than you think, but don't give up. You have to understand how the allocators processes work. And that process might not align with kind of your KPIs, your key performance indicators, right? Number of calls you get or things like that. So it's important to understand how they work. For instance, we usually don't take a call until we're looking for something in specific, or if we get your data and we don't quite understand what you do or how to do it so that we know how to categorize you. But even then, you have to be consistent. I mean, that's really a sign of what people look for in terms of institutional managers. Consistently send out returns, firm updates, market outlooks, white papers. And that is really important. And that's how you stay in front of folks and stay top of mind. And really, I mean, sometimes for us in terms of managers, the hardest part is getting their returns. Whether it's diverse or not. Some managers, they want to trade, they want to focus on that, and they don't have someone full-time doing it. So if you can do it, you really need to. And it's always, especially marketers, you have to be persistent. You have to be patient. You are constantly walking that line between, as they say, kind of in marketing, dripping on the allocators versus stalking them. And I think that's important.